Thank you, sir.
What's up, everybody? Welcome aboard. It is the markets are, I don't know what the hell they're doing. They're going up and down like a yo-yo. A lot of volatility, high stuff going on, and Michael's got a special presentation for you that he brought. He dragged me and Pat with him. So I'm turning it over to Michael. What's up, Michael?
What's going on, guys? Good morning. Good morning. So, I've been watching what's happening. This initially started as a downturn, but now it's just all over the place. We're seeing these just tumultuous moves, and what I'm seeing is I'm getting the question a lot. I'm sure Pat's getting it, Bubba's getting it too. How are we trading this? What are we doing to trade this market and these conditions? And I think the most important thing to understand is, there's no right answers to this. There's things that we're doing, there's things other people are doing. Some of it's working, some of it's not for people. And the thing is we've developed enough strategies over the years. We've had enough experience to see what works in what conditions. And really what I wanted to do was bring that to the public today. I wanted you guys to understand what we're doing that's working right now, what we think should be avoided, and basically how to take advantage of the market conditions. Because one thing is you can make a lot of money in these markets if you're doing the right things and if you're playing ball the right way. So without jumping too fast, too far, I just want to introduce everybody. The main host here is Todd Bubba Horwitz. You can hear his voice already. 45 years. Actually, it's 46 years now, isn't it? Aren't you 46 years?
47, but who's counting?
Or 47. Who's counting? I mean, geez. 3 decades as a floor trader, legendary TV and radio personality, developer of multiple options trading strategies and futures trading strategies on different platforms. And I think one of the things that we skip over a lot here is, and because we always talk about the strategies you develop, but I think there's also a huge value to what you've seen. You've seen market conditions. You've seen fast, volatile markets. You've seen low volume markets. You've seen all kinds of different things. So your experience in these markets and how things unfold and what happens and what works in these conditions is pretty much unparalleled. And I think there's a lot of value to that. And I think we always talk about the strategies that you have, but I think the experience right now is really what we're looking towards. You have about 15 years teaching at this point.
Yeah.
I think you're about 15 years.
Yeah.
So on the other side, we've got Pat Assalone, nicknamed the AngryTrader. How'd you guys all get these cool nicknames? How come I didn't get a cool nickname? We got AngryTrader, we got Bubba, and we got Mike. I mean, I don't know. I got to come up with a good one.
One of my students came up with it. I'm not that bright or creative, so I can't take
I like
but you are angry.
Yeah, he's the AngryTrader. So 20-year professional trading veteran. You are licensed. You've done CTAs. You've done you name it. You've been on both sides of the equation here, SEC, CFTC. You've developed the modified market profile method, which, let's be frank, it's one of the most highly sought after futures trading methods. It works in other things, but you predominantly use it for futures. And you've taught thousands of traders this method, countless success stories. We see them every day. Guys, if you don't know, go check out targettrading.co. You'll see the Trustpilot reviews. You'll see that we've got 100 plus 5-star reviews. You won't see anything less than 5-star reviews. There's a reason why. Check us out on Google, check us out on Facebook, check us out on YouTube. You'll see that we are a 5-star rated company. We've won multiple awards for what we do. And a major driver behind that is this guy. Despite being angry, he's pretty damn good at what he does. So Pat, welcome to the crew.
Thank you.
And this is me. 25 years in the financial industry. I was an investment banker for a big institution, founder, owner, and operator of multiple education companies and software companies. And I think for me, the story is I'm not only the president, I'm also a client. That's kind of a joke. But it isn't. There's nothing that we have that I don't use. I like our systems. I like our methods. And despite my experience, I follow these two guys. So when Pat and Bubba give me direction, guys, I'm the one that I follow them. And I've got the industry experience that I could be making a lot of these decisions on my own, but I also realize that these guys bring weight and experience in ways that I can't reproduce myself. So I go to them to get it, and I recommend that we all do that. So I'm here as a fanboy in a lot of ways. And that's really why I wanted to bring it to the public here is I look at this as how can we take advantage of the knowledge and the mindset that we have to get through these tumultuous times. So quick disclaimer, guys, this is for education purposes today. We are not financial advisors. We don't give individual advice. Okay. We give general advice. You take what works for you out of it. Educate yourself, cannot stress that enough. You cannot get enough information in this business. Okay. We have a full disclaimer. It's on any of the websites, targettrading.co, bubbatrading.com, Flytech Trading, Nova Trading Lab. Guys, we got a lot of partners. Okay. A lot of partners, a lot of affiliates for what we do. We also have a lot of backers. Okay. We do a tremendous amount of work with Capital Trading Group. We do a tremendous amount of work with ITH. We do a tremendous amount of work. Who am I missing, Bubba? Help me out with this. Go through our sponsor
TRADIER
list.
Brokerage.
TRADIER Brokerage. Oh my gosh, I almost forgot TRADIER. We've gone through and found companies that we believe work the best in the systems that we use and that deliver phenomenal customer support. Those are two things that we value. So as we go through these programs, understand we've got big backers and we ourselves have the information and the knowledge to give you something that's valuable. So let's get started. What are today's markets? Bubba, you want to give before I go down any of the drop downs, what's your response to this?
Well, I mean, in today's market, you've got massive volatility. I mean, the VIX is trading consistently between 40 and 60, which is ridiculously high, and it makes it much more challenging. You have to be able to make quick decisions. And in fact, this morning during Market Mavericks, I said, I'm going to have to adjust all of our risk parameters over the weekend because we don't take enough risk. You have to be, if you're going to trade in the market that you have right now, you have to be willing to take more risks than you would normally take because the moves are so much quicker and swifter that if you're not willing to take the risk, then maybe you should sit it out because again, you can make a lot of money in this market, but you also have to be willing to take the risk because the worst thing that can happen is you do it like a day trade, you get stopped out too fast, then it immediately goes in your favor a massive amount, and you're sitting there saying, what did I do wrong? Well, what you did wrong is you cut your risk too short. This market is telling you that there's going to be a lot of movement. I mean, you can look at the SPY. When did you see the SPY that was going to have a $20 moves every week now, okay, versus $10 moves? Right now, the projected move for next week in the spiders for April 17th, it's a short week, is $30 between now and next Thursday for the SPY.
It's incredible. It's incredible. Pat, thoughts?
Well, when in our room, you're having to remove the max risk parameters to take trades, it's telling you something. The people who are using prop accounts, they're hitting it big because they've got so much capital to use. It's really not affecting them. They're just reducing their contract sizes while they're increasing their risk. It's not going to work for some people. For most people, they can't take trades because if you even sneeze, you've gone from 5 points of risk per contract in the ES to 10 in the blink of an eye. It looks orderly, but it's not.
Well, let me just interrupt you 1 second, Pat. The NASDAQ, as we're talking, the NASDAQ just rallied 100 points.
Bubba, strange that you say that because this morning I took a trade in the NASDAQ, a reversal short with a 60 point bar where the usual risk is 20. And it looks perfectly fine. It looks great. Everything's orderly. It looks just, when you measure that thing off and it's 60 points, your jaw will drop. Right. And that was the pre-market.
And it throws a lot of the indicators and the software that people use to trade with completely askew. It just doesn't work with this volatility.
Mike, may I say something too? A lot of and this goes to show how well our Trade Assist software works. You have people in the room saying, well, the bar got painted and it's green, but it didn't take a trade. Yeah, because the bar is 87 points.
The bar is bigger than the screen.
Because you blew the risk out. That's what it's programmed to do, is to keep you in one piece.
Yeah. Yeah. And I think that volatility is, I mean, the headlines are incredible. And anyone who's, live through the headlines. I know we're not big news guys, but we got, the news is out there and we're watching it. And I mean, the headlines are incredible. Stocks fall as Wall Street wraps up. This was just a few minutes ago. This was an hour ago, right? Not even an hour ago. Stocks fall as Wall Street wraps up one of the wildest weeks ever. Uh, Stock market today. This was yesterday, right? Dow Jones tumble as liberation. Oh no, this was a few weeks ago. So, and hold on, there's one more here that I love. These are over each other. If you Google market news, these were over each other. So this is 6 weeks and then 2 weeks, 6 days ago and then 2 weeks, right? So markets surge and then investors recoil. And they're literally over each other in the news a few days apart from each other. Okay. So this is a wild time right now. That's the biggest thing to understand. And when you see the charts, it's incredible. Here's an S&P, a 30-day S&P. Look at the right side of that screen. It doesn't even look right. Zoomed in a little, it doesn't even look right. Like that's incredible to look at. That's a 5-minute chart, and that's month to date right now. I mean, how do you trade that, right? That becomes the question. How do you trade this level of volatility? There's your gold, massive drop, run back up. There's your oil, right? This is a crazy time to trade right now. So then the question I ask is how do we trade it, right? What is the best strategy during times like this? A lot of the traditional strategies don't work. Okay. One of the number one reasons is of course your risk parameters get blown out. It's definitely a long-term buy and hold strategy. It gets scary right now. Now I'm going to caveat that with something, and I want to be clear about this. Buy and hold over the longest term is still a phenomenal strategy. It's still the core strategy. You're still looking at whatever your gains are over the long term. Okay. And anyone that tells someone differently that doesn't know what they're talking about. Okay. Just because there's drawdowns, just because there's periods of pullback doesn't mean that long term is not the best strategy overall. It's slow though. It's methodical. If you can limit those pullbacks, that's where the maximized growth happens, right? And I know, Bubba, you talk about this a lot. And every webinar that I hear you in, that's one of the things that I hear you focus on is still, at the end of the day, the market over the long term is still going up. The question is can you limit the draws?
It goes up 8.5% year over year in history, 10% since 1950. So again, but everybody wants to get a bigger return on their trading. There's a huge difference between investing and trading. Okay. And you can combine some of the things if you're using hedging, then you're actually actively trading a market that you're investing. But again, you have to recognize exactly what's going on, which is why you need to be prepared for the different strategies that you can use at different types in the market.
So I can go through a big thing here. What you really need is knowledge to start. You need a strategy that lets you play when prices go up or down. I think at this point, this is kind of obvious, right? But you need risk management. Okay. And one of the things Pat just pointed out is, wow, your risk management gets changed dramatically. That doesn't mean it gets thrown out the window, right? You still need risk management. You still need the ability to not blow out your account on some of these higher risk trades. And for all of this, you still need a level of expertise. Okay. These aren't play markets. These aren't markets where, I liken it to the real estate market 3 or 4 years ago. You could buy anything this week and sell it next month and have made money. Okay. That's not an expert market. Anyone can play in those markets. These markets that we're in right now, they're expert markets. Okay. This is where you have to know what you're doing in order to not blow up your account, in order to not hurt yourself. Okay. So we do have some solutions. And one of the things that I just want to point out before we get into any details, because we get asked this all the time, how well are our solutions working? Are they working? So options is a little bit difficult to show because everyone's account's a little bit different. They have different portfolios, especially on the hedging side. It's hard to really show results on that side. We can show the future side. Pat, I use your room because we literally track the student results. And what do I mean by the student results? So those of you that aren't familiar with what Pat does in his room, they review the trades of the students. So students, when they take a trade, whether it's sim or live, whether they're a beginner and they started this week or they've been trading with Pat for 10 years, they submit their trades for review. And they get reviewed for analysis, they get reviewed for entry, they get reviewed for exit, how they're using their risk management, their money management, all the factors, and they get reviewed live in front of the other students. All of the similar trades. So if everyone took the same gold trade, it only counts as one win. If one person takes one loss and it was a dumb trade and they shouldn't have taken it, it still counts as a loss. Okay, so understand that these numbers are skewed towards the losses because there are less individual players taking losses and more people taking consistently the same wins. But right now, through these crazy conditions, March, you had a 79% win rate. April, you were at 70, or so far year to date, or month to date, I'm sorry. In April, you're at 79% win rate. Your students are ripping it right now. So they're doing something right. And I say that as a results explanation. And guys, if anyone's interested and wants to see what those results are, we post them every day. Okay. The actual trades that students submit are posted. Now they're in a long video, a long form video. And we do that, just so you guys know, we do that for compliance and transparency. Okay. We don't do that because we want everybody to see their name up on the board and hear that they had a win. Though some people do like that. I got to admit, it's kind of fun. But we do that for compliance because those win rates are very, very high, guys. Compared to the industry, those win rates are very, very high. So in order to protect ourselves for compliance purposes and absolute transparency, we post all of those wins, all of those losses on a daily basis so that people can actually see the trade. The screenshots of those trades are showed every day. You can see them on YouTube. It's at Target Trading Academy is the link there if you want to check them out. So Bubba, I'm going to jump to you. Because I know you've got a TV appearance in a little bit, and I want to get through some of the stuff you're talking about. This is a hedger's market. Talk me through your strategies and kind of what you're doing. I had one written up here. I don't know if you want to go through that or if you want to talk about it generally, but how are you using your hedging strategies in these markets?
Well, we use options, against a current portfolio. I mean, every stock, every trade you have has a representation to a certain index, and either we hedge directly to each stock individually, which I do, or I beta weight a hedge to mutual funds, which I also do, because again, when you have a SEP IRA, you're not allowed to have individual securities. But you can actually create a max risk level on any one of your portfolios and any one of your positions that can keep you in the market. When people are puking and getting out of the market, we're actually, all the people that are hedging with me are buying more stock. I mean, we've bought over the last 3 weeks, thousands and thousands and thousands of shares, because again, every time the market breaks 3 or 4%, depending on how you have your parameter set, you're actually buying more stock with the profit you're making from the hedge. And of course, then you get the rip your face off rally on Wednesday, which is up 12%. And again, if you're hedging, if you're not hedging, I think that's the biggest mistake anybody could ever make, because the biggest thing that all of us have to be worried about is not our little day trading where we're making extra money. We're trying to, buy some things, do some things, and create an income flow, but protecting your long-term assets. People insure their health, their house, their car. Why aren't you insuring your portfolio, which is more important, because the portfolio is what pays for all the other insurance. So why aren't you insuring that? And that's what we do. We insure a portfolio. And there's many people here that are members that, I didn't take hardly any drawdown in my long-term portfolio. And in fact, I've made a lot of money over the last few weeks using the methods that we use, because again, I continue to accumulate more stock as the markets break. And I think it's insuring your overall portfolio and putting yourself so that you don't have to think about the potential panic when the markets open down limit on Monday night. Who is panicking? I'm sure there was a bunch. I was actually cheering because again, I know that I'm going to be buying more stock, and anybody here who is hedging understands that that's what the whole model is about. Remember, it's compound interest. We're basing the entire model on what the markets have done. 8.5% for history, 10% since 1950. Think about that. Take the rule of 72, which is how often it takes your portfolio to double at those rates. And again, if you're buying good companies, not crap, and you're not trying to in and out the market, and just holding on to those positions, you know, Apple, Google, whatever they are, they're going to grow. And yes, they had a big drawdown, but yet we're not in trouble. We're still at least in the game. Okay. And I think that's the key. And markets are down 16% for the year, whatever it is. And my portfolio is up for the year.
Right. And you're picking up I think the important part of that is you're picking up those equities and those instruments so that when that rally does come, you're getting a leveraged effect.
You're
That to me is
compounding out, which is, again, Albert Einstein says compound interest is the eighth wonder of the world.
Yeah. Yeah. Pat, you had your hand up. Did you want to add to that?
I also want to just add very quickly that all of the people that you heard whining and complaining like little babies weren't hedged. Okay. They were the ones. So their financial advisors either left them out to dry or they need to learn how to hedge. So you need to go to Bubba. Okay. And here's the reason why. If you did what you were supposed to do and you had the downside protection in place, you would have done just what he did. The people that are complaining are the ones who need to do it for themselves because their so-called financial advisors are not going to be doing it for them. Trust me on this.
Yeah, but it's good for Xander right now because
it's great for Xander because you're his dad.
Yeah, he's got a lot of happy clients. Well,
exactly.
You know, and I think one of the things that and this is that simple math lesson. And I remember early on in my Merrill days hearing that lesson that you know, if you have $100 portfolio and you lose $25, you lost 25%. But if you want to get back up to break even, you have to make 33% just to get back to break even. And the idea of protecting that downstroke so you don't have to gain it back just to get to even, right? So that mindset has always stuck with me. And actually, I love this representation of it. If you can limit the downturns and you can stick with it over time, you're going to grow with your hedge portfolio faster because you don't have to come out of ditches, right? You don't have to dig yourself out of a ditch. So no, I think it's a powerful concept. When you're talking about hedging, and this is something I was just asked the other day, you've got your regular portfolio. So say I've got like my IRA at Edward Jones, and I've got you know, a 401k with Merrill. How do I hedge that? Do I hedge that inside of those accounts? Am I hedging it outside of those accounts? How would I, as an individual, hedge that the way you're
You
talking
have
about?
to hedge those in cash at like a Tradier or anywhere, but Tradier, we have automation that'll take care of it for yourself. You know, go back to that last slide for a minute though, before I go on with this. This is actually from a member. This is not mine. This is not something we made up. This is a member that on March 18th, 362 weeks ago, bought $100,000 worth of 367 shares of the SPY. Okay. Unhedged, it's doubled. It's worth about 200,000, but if it's hedged, it's worth about $1 million. Okay, and she's got about 1,700 shares now of this stock. Okay,
Crazy.
That's how it grew. Again, that's not mine. That's a member. She'll be happy to talk to you and show it to you. She sends me the results every single week, just like that. So, but when you're hedging, okay, you're using the market against itself, using the derivative products that allow you to stay in that market so that you don't have to worry about getting out. And you have to use a cash account because a lot of the brokerage firms, a lot of the advisors don't let you trade options. And if they do let you trade options, they charge you so much that you can't overcome their costs. So you use a cash account like at a Tradier, okay, which is $10 a month. And again, it allows you to grow. I mean, I made today already between the rolls and everything else, I made up over 150 trades today already, all automatically.
And then you're using a TRADIER account to do that, and
Yep.
it's being done for you. And how much was it again?
I made over 150 trades today.
But how much is TRADIER? How much is your TRADIER account?
Tradier is $10 a month, flat brokerage fee. We have a licensing fee for the software to do the automatic hedging. I mean, I get texts and emails all day long. But again, if you're not insuring your portfolio, I have to always ask you what's wrong with you, because at the end of the day, you buy health insurance, you don't want to use it. But in your portfolio, why not take advantage of the insurance that you're buying and grow your portfolio organically by markets? There's a guy on here who made a comment. My boy KB. How's it working out for you, big boy? I know he one time bought, I can tell you this story. He bought $100,000 worth of Facebook at $100. It's now worth about 5 million. Okay. So,
He's making a killing. That's his. He just wrote to us. He's making a killing, guys. So yeah, and I think that's the real message here is like, hedging is a bigger package than just playing it. And it's not that simple. It's not that difficult to set up. And I think that's the other misnomer. I
let me
think
make
we
one
get
other
in our
interruption.
heads.
Let me make
Go
one other
ahead.
interruption here. Again, one of the other things to remember is Pat's got a great room with the H3As and with his stuff. We got the Market Mavericks, which is a great room that hits a super high percentage. We made money almost every day this year, little bits and pieces. But at the end of the day, if you're not comfortable in what's going on in the market today, and it's again, there's going to be more risk. That's just the way it goes. But if you're uncomfortable and you're hedged, you're getting a lot of action within your hedging portfolio. It's going up, and I mean, I've had rolls this week on Tesla up and down 3 times in a day. Okay,
Right.
because of the wild volatility. So if you're uncomfortable trying to trade yourself manually, this will do it automatically for you, and it's protecting your portfolio with every trade. You're not exposing yourself to more risk, and all you're doing is growing a long-term business where the reason you're have an investment account is so that you can retire or do whatever you want when you get old enough to say, hey, I want to take it easy, and I have all this money I've saved. I didn't panic out. I didn't puke out. I've been able to work this money and grow it and grow it and grow it.
Well, and I think, you brought up something important with how you configure it, because I think there is, and I can tell you I hear this all the time when I speak to students and I speak to customers, is it's so complicated. It's so complicated to set up. It's too complicated to manage. It's this, it's that. Well, that's what the software is for. The software has simplified it. You configure it to your account and then it runs for you and it takes care of that business for you. And I think I like taking that fear away. Now, that being said, there's no reason to not learn how to do it as well. There is an empowerment to the education side and understanding what it's doing and understanding why it's doing it. But I do think that from a hedging perspective, having the automation and having it done for you is extremely powerful, and it's not too late to start. I think that's the
If
other
you're not
message.
hedging, you should go see a doctor.
I think there's another message there too, that it's not too late to start. I've had people say, "Oh, well, I'm down this much right now, or I'm this, or I'm that." That's okay. Start it now and don't take that next dip, right? Start it now, get it running, and have it in place so that this doesn't happen again to you. And I think there's a value in that. It's never too late to start. I was actually speaking to a customer yesterday. He's preparing for retirement right now, and he's scared out of his mind. His portfolio's down huge. He was leveraged. He was leveraged with some pretty strong securities, but he wasn't hedged. And he's like, my Tesla's taking a dump, my Nvidia took a dump, this took a dump, and he's like, how am I going to retire? And the answer is you're going to hedge, right? You're going to hedge. You're going to add some day trading income to yourself. You're going to add some revenue trading, day trading, and you're going to be able to make money regardless of the market conditions. And that to me is the power. Protect your money and have ways of making it regardless of market conditions. So, the other thing you said that I really like is you kind of eliminate the thought process. You eliminate the fear, knowing that your portfolio is okay regardless of what you see on the news that day. We started off the webinar with, "Hey, listen, this is the news flashes. Market's up, market's down, market rallies, market crashes," and that's all in the last like 2 weeks, right? You're not worried about that because you know that you have your insurance policy. And I like, by the way, that metaphor. I think the metaphor of the insurance policy is a strong metaphor. So you got your insurance policy and you're okay. Are you watching it? Of course you're watching it because you want to know how well you're doing.
You
But you
shouldn't be
also know
watching
that if
it.
it crashes,
You should never look at your investing account. One of the worst inventions is the smartphone, where people are checking their
transparency, right?
401ks every 10 minutes.
Mhm. Very true, especially right now. So I think that's a big push. So, and I think the biggest thing is it keeps that long-term portfolio intact. That's a huge play. So that's the hedging side. That's really, I think of that as the insurance policy or the shield side. Now, there are some strategies that you have that are attacking the market too. Attacking the market, hedging does that, but not in an affirmative way. Oh, you just got asked that by Ed Dolezal there, Bubba. How much risk capital is recommended at this time to trade options and futures?
It depends. What are your objectives? How much you trying to
Yeah,
make?
that's
That's a bigger question. I mean, you can day trade with a very small amount, okay? But again, you have to take tight risk, which really is not advisable at this particular time. I would say that I would not day trade with less than 10,000 right now, because there's going to be moves. I mean, again, if you want to collect from the benefits on these moves, you have to be willing to take the risk that goes along with those moves. Do you disagree with that, Pat, or do you agree with that?
I completely agree with you, and I'll tell you what else. I told several of my students when the margin requirements have gone up the last few days, big deal. Just go to micros. Cut your contract sizes in half. Go to micros.
right. You know what, guys? I'm gonna jump through the options. Let's get to the day trading strategies because there's a lot of interest in this right now. Um, So yeah, and you said it earlier too, Pat. You had to remove some of the risk parameters that you had because you were going to blow them out. It was going to stop you out too quickly, and you'd get pushed out of the trade.
Well,
So
you're also looking at things this way too. If you're going to stick to the minis and something like the NASDAQ, you're going to have to cut down to one contract. Well, one contract is not worth it because your options are limited. So go to the micros. Use the micro NASDAQ instead of one. Use 5.
Hey, Pat,
Yes, sir.
did you ever think of using the minis and the micros together? So
Oh yeah.
if you went to one mini and you entered on one mini, you could exit through the micros. And because once you get to 10, they're fungible, they come off by themselves.
Absolutely.
interesting, interesting.
There's more than one way to do this. People, they need to just relax, take a step back and breathe and say, what are my options? We'll inform you of what your options are. We do this every single day, all day long. It doesn't mean you can't participate. You just have to change something here and there. That's it.
And by the way, just as we're speaking, I just rolled Tesla in my account. Okay, I just rolled it up and I just bought some more stock in Tesla. I just bought 43 more shares of Tesla as we're sitting here right now.
Didn't have to push a button. Love it.
It just came up on my phone. There it is. You can't see it, but there is the text. Just bought 43 shares of Tesla.
Yeah. Yeah. It's crazy that happens while we're doing that though. I love it. So let's talk about day trading because I think, I skipped over the section about using options to attack. I think you kind of hit into that a little with hedging. I think there's certain strategies that work well now, and I think this is one of the things that scares me a little bit with using options right now is they're freaking expensive. We were just talking about the cost of a SPY contract and it's gone through the roof.
You mean an option that I used to pay
An option,
$5
yeah.
for it? Now I'm paying $15 for it. Yeah, of course.
Exactly. It's literally 3 times the cost, and the run isn't necessarily there to make it worth it. So I think there's a little bit more risk on that side, and that's why I jumped over to the futures day trading because I think that's really where the play is right now. I think there's more of a play on the futures day trading side if that's really what you're looking at.
Hey,
Bubba, go
Michael.
ahead. You look. Yep.
Just so you know, my phone's gonna ring at some point. I'm just gonna mute my camera because the other thing needs my camera. I'll mute
Right.
myself. I'll stay because if you guys are still here when I get back, then I'll come back and
Or
participate.
or yeah. Or are you hosting or am I hosting though? I just don't want it to close out.
It doesn't matter. I'm not gonna close it. Okay.
Okay.
I'm just gonna mute it and get rid of the camera now because the two things can't share the camera.
Being a
So
celebrity must be hard, man. I got to be honest. It must be hard. I mean,
yeah,
I'm
this
just
is my
thinking
third
out loud.
interview today.
So talking about day trading, day trading, just general description, it's getting in and out of a trade in the same day. The flexibility is you can go longer, you can go short. It doesn't matter the direction of the market. And the truth is though, there's a lot of different day trading strategies. We even in-house have multiple day trading strategies and we have multiple methods that we use. Pat, you've got your reversal, you've got inverses, you've got gap fills, step 3. We've got the blow off trade. We've got all these different ways to trade, and certain ones work better in certain market conditions. And I think one of the things that people have been asking is, how do I trade this market, right? So when it's a little bit less volatile, you'll see those larger trends working. It's a little bit harder to catch the reversals because there's not enough room to run. Now we've got some volatility. So the question becomes, what are you using right now in these markets? And I know one you talked about was you wanted to talk about how there are long and short opportunities, even with the market making bigger moves, correct?
Correct. First and foremost, I would say get in the market Mavericks room if you're not there, because that blow off trade is designed for this kind of environment. It is absolutely perfect for this kind of environment. Whereas at, let's say, that time of the morning, my method may not give you as many executions or the run that you're looking for. And there's a reason for that. You're taking slightly more risk in the market Mavericks room and you're looking for one specific thing, and that's it. You're not dividing your time amongst other things.
And that has shown, by the way, his numbers have been awesome. I think the last like 12 days, I don't think he's trading days. I don't think he's had a losing day. I think it's just been every day has just been rip, 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 rip. And it's because of exactly what you said. These are the conditions that it's built for. But you're right. You do have a little bit larger of a risk. You're giving yourself the opportunity to run a little bit longer. And it's literally designed for these market conditions. So, and by the way, guys, Market Mavericks, what we're talking about is it's a room that Bubba hosts each morning. It's usually starts at 9, but if there's certain types of news coming, he'll move that time slightly. It goes for about an hour, hour and a half. They're looking for one particular trade, which is a blow off trade. It's when the
Price and time
the
come out of control.
there
And
you
it
go.
worked really well with the HVAs. But we've had 3 losing trades, I think, all year. Again, they're not all big wins. I mean, today was basically depending on where you got filled. Everything is where you exactly get filled. But today we had 3 trades that were in 3 small wins. But again, we're very defensive, which is why I have to adjust the risk parameters so that I can let the trades run a little bit farther. But again, our number one thing about trading, you always have to play defense first.
So, and one of the things, guys, with Bubba's room, the reason why we like that Market Mavericks room, if you're not in it, if you are not an experienced trader, Bubba's calling out the trades for you. So he's identifying the trades, he's calling them out, he's watching the 8 markets for you, he's telling you where to go, he's telling you what he's looking at. You don't have to figure it out for yourself. So it's a great starting room if you've never traded before. It's a great place to be. It's also good for experienced traders if you don't already trade the blow-off trade, because you can kind of add that arrow to your quiver of arrows, right? It becomes an extra tool that you have. It's 2 or 3 extra trades a day that you might not have been taking, that you now have a 47-year veteran pro trader identifying for you as you go. I like it because it's a fairly easy trade to learn. I still, of course, don't have the eyeball on it the way, say, Bubba does, but it's a fairly easy trade to learn that you start seeing it more and more when you know what you're looking for. And that's one of my favorite parts about it. And of course, the market commentary is awesome. You get Bubba talking the whole time. It's the Bubba show in the morning. So it is a blast. And that's what we're talking about when we says Market Mavericks. And he's watching 8 markets and he's only looking for one trade, the blow-off trade. All right. So sorry about that, Pat. So yeah, you started off with saying start with Market Mavs. Keep going.
And then you come to my room. And something that you were saying earlier really, really hit a nerve with me when people say something to the effect of, oh my gosh, it's so difficult. Excuses are lies. I'm the only person in this business that is drawing the levels the day before the market is even open. I am telling you where to go long, where to go short. If you go one step further and you use the Trade Assist software, it's telling you with a red bar to go short. It's telling you with a green bar to go long. All you have to do is wait till it gets there. The biggest problem is you. Because for some reason, everybody thinks there's always a trader. There's not always a trader.
Right.
According to my method, I'm not using these ridiculous news announcements, economic reports. I'm not using these funky fundamental technical analysis readings like an RSI, for example, a really stupid indicator. That's what it really means.
It's funny, you didn't use the word stupid the last time you described that.
Yeah, well, this is a family show day. I was warned. So what do? You just wait till it gets there. Allow the method to do the work for you. It takes all the thinking out. So don't tell me it's difficult when all the thinking has been taken out of you. Instead of managing.
I got muted too. I don't know what happened there.
Yeah.
There you go.
All you have to do is follow the method. You don't have to do anything except.
Let me ask you a question though, Pat, because you said something and it flags, it hit my ears. You said, well, you're the only guy in the business that calls this out the night before. Okay. And to me, I hear that. And let's say I'm somebody that's coming in off the street. I don't know you. You and I are longtime friends, but I don't know you. Okay. Now I don't know you. And I say, okay, Pat, you call it out the night before, but have you seen the freaking news? Things are going up, they're going down, they're all over the place, massive volatility. How is your calling out these levels the day before working in these conditions?
Funny that you say that, because the trades that you're seeing and the other trades that you're going to see in a few moments, the day before that, there was a goofball who came out and said it was going to be the worst day in history, some sort of Black Monday or something or other.
Right.
Okay.
Right.
So first of all, that's freaking criminal, because you have a bunch of you have a bunch of people who are now scared to death and going to take his advice when you have absolutely no clue whatsoever if he's doing that specifically to get you to sell out your account so his buddies can ram them up. That you don't know about. And I'm not saying that that's what's happening, because I don't know. But it's kind of strange that these kinds of announcements come out. Well, these levels were just so happened to be drawn Friday afternoon. Okay, so what am I using to draw them? I'm using the volume that has already been traded. The levels are created by those huge handful of entities that can move the market vertically. Strangely enough, boy, you hit those levels, the bars got painted, the trade assist software did its thing, and wow, they won. Now, do we win every single time? No, but you went over the numbers previously.
Yep.
We just so happen to win a lot more than we lose when you're trading the method. And what happens? Now you only have to learn a method. You don't have to worry about actually measuring bars off. You don't have to worry about setting orders. You don't have to worry about moving orders or managing trades, because the trade assist software does all of this stuff for you. Can you do it manually? But in as much the same thing that you had said earlier with Bubba, it's a lot of work. Could you imagine having to do the manual operations for 150 freaking options trades? That's a lot of work.
Huge.
All you have to do is sit back and manage a bot now and wait.
Well, and
I've been doing this for 15 years. The method works the same in every single type of market condition.
And the thing I like, and so the long and short answer of what you just said is yes, it works in these conditions. And I think that's that in and of itself is a powerful thing. I think the other thing with yours is, and one of the things that I've been a huge advocate of your system from the very beginning, is for a lot of people whose math skills, they can't do these incredible computations like frickin' Bubba can in his head, where he's got probabilities and this and that. I mean, by the way, don't ever play poker with Bubba. If anybody's curious, don't ever play poker with Bubba.
Well, he's really a poker professional who does options on the side.
Who does options, exactly. So, but the thing I like about your methodology, and we have one of your charts up on the screen, is, for lack of a better expression, it's paint by numbers, right? So the first time you're getting to that level, your expectation is it's going to go in the other direction, right? And then each time it gets to that level thereafter, the likelihood of it going through is going to get higher and higher until it goes through. And then that becomes support, becomes resistance, resistance becomes support, and the level becomes the floor now, and then it bounces back up. So you've got two trades on this one. Do me a favor, just so somebody who doesn't know your method, can you walk them through this chart and explain the two trades that are on here? Because you have both a long trade and a short trade on this chart.
And there's also one more in there that's even more important than both, and I'll explain that in a moment. This was right after news. So generally you have some sort of a reset after news. Generally, this has already been here at this edge before. So your contract size would be reduced. So let's say if you were using 10, instead you go down to 5 or 6, depending on what we've already agreed upon you were going to go to whatever your smaller contract size is. The market moved up to that edge. The bars turned red. It was valid, meaning the trade. So the trade assist software took it. It took the first portion of the position off and then got stopped at break even for the last 2 contracts, because that's what it's programmed to do. Now, Mike, don't go to the green winner yet. Go to that red bar in the middle. That red bar in the middle threw out a sell signal. Well, what happened? Once that sell signal went out, the trade assist software threw out an order. The next bar was a better entry after it closed. It threw out an order. After that, your next bar did not close on an HVA edge. Therefore, the software did what? Disqualified the trade for you. You didn't have to worry about it.
Right. Right. So someone who's watching this and doesn't have the software would have to do that and say, well, I would just take this trade because it's coming back to this edge again. But the software says, no, 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 no. This is not the right trade. Disqualify. And then you're not into this, which would have been a loser. This would have been a loser. Right.
Which if you would have been pulled in, it would have been a loss. But the software is managing the trade for you. So your first red bar, once it closed, it would have thrown an order out to go short. After the second bar closed, it would have moved your sell stop up to give you a better entry. The bar after that was black, meaning it closed completely outside of the HVA edge, not touching it. It's not valid according to the method. Automatically, it's disqualified. You're moving to the next trade now. So
now the market plays around a little bit inside, just above the edge, and then it comes back down. And by the way, guys, the lines we're talking about as edges, and I don't know if everyone can see this on their screens, but it's the difference between the gray and the golds. These are the edges that we're talking about when we're talking about HVA edges. So, and then the market comes back down to it and you get this green signal. So walk me through that.
So let's go back to the first red signal. That's resistance. Once you break through resistance, it becomes support. So the second set of red bars in the middle that we just went over that were disqualified, once you broke through that and stay above that area, the previous resistance now becomes support. Just to the left of those green bars triggering red, or excuse me, the bars triggering green, you had made a new high. The market reverted back down to that edge. So that edge that was previously resistance is now support. The bar is green, telling you you have enough reward to risk that is a valid trade to take. Once that green bar closed, the trade assist software threw the order out. The order was taken, and exactly the same freaking thing happened on 6. 4 got taken off at a profit equal to that of the initial risk. The last 2 were stopped at break even. Did we get the entire move? No, but we did pretty damn well. And on micros, that's unheard of.
What was the combined profit here?
I believe at that point you were up over $695. Right.
So on two trades
this was sim, Mike. This was sim because my original trade, which was the gold trade, which you're going to see also, was live. So I immediately switched to sim because I'm not giving that money back.
So you want to walk through the how that edge works again here one more time?
Sure. This is an entirely different trade. This is the S&P ES, which was also done that day. The market moved higher. So you can see if you go right about to the middle of the chart where the red bars occurred, you were not pulled into a trade. It was disqualified. The market moved higher, higher, higher. Immediately to the right of it, you did not get a valid long trade because there was not enough reward to risk. So the market kept moving higher. Again, these were areas that I drew the day before at 5 p.m. The market hit that edge with the first red bar. The trade assist software threw out an order. The next bar closed higher, giving you a better entry and a valid trade as well. As soon as it closed, and let me tell you something, it happened so fast. If you were not doing it with trade assist software, you would have never caught this trade. It tagged you on the next bar in almost immediately. That thing puked. 4 came off and it trailed on a 2-bar stop until the last 2 were taken out also. Trade's over. That's it. You're done.
And again, lines drawn the day before. This is taking now. Granted, this is, and you did say something, and I want to be clear. So this is Trade Assist software that you used here. So this is a hard trade to take manually, but it's just showing that it does work under these conditions. And to answer
Again,
your
Michael,
question, Ed asked a question. To answer your question, there's a wide variety. They can be low. They can be $300 a month. They can go higher. It kind of depends on what you're trying to accomplish. They all have financing, so we don't do big deposits. But that's an example of that one. So just for example, these HVA edges and being able to take that trade off of it and having that ATM software to do that is around $350 a month is that software. Go ahead, Pat. Sorry.
and just to be clear, we're going to go back to that buffoon again, who told you that the market was going to zero. It was going to be the worst day in history. Well, he didn't tell you what prices to go short at.
Right.
He didn't tell you anything. I'm the only guy in this business, before I even knew the alleged black whatever event was coming out, that put these edges up, and they still held. They still did. And everybody in my room will hear you they will tell you that I literally will go on that mic telling people how great looking I am, because only a guy that good looking could have drawn those edges the day before and had the market stop there out of pure fear. Okay.
So I mean, this is one type of trade you do. You've got your reversals, your inverses. The other one and this is another one first. Oh, sorry.
That's another one.
Yeah, that's just another one showing the same thing. I wanted to get to your gap fill, because I love your gap fill, and I think they're massive gap fill. So talk to me real quick about what the gap fill is and how it works.
So first and foremost, a gap fill trade is the most powerful trade that we have. The reason being is we're using the previous day's range. Now, why is that so important? Because at the end of the trading day, especially from Monday afternoon through Friday morning, a lot of big money entities are holding in the pit session. They're not closing their positions at the end of the day, they're holding. So let's say if the market's going higher and higher and higher, which means the point of control, the most heavily traded price from the previous day, is moving higher, that means the buyers are in control. So if you open gap up, what are professional traders going to do? They're going to see a Christmas present in April. They're going to close their freaking positions, and they're going to get out with this massive win because they're still holding inside the previous day's range. Well, conversely, because futures is a zero-sum game, what are all those people that were holding short going to be doing? They're losing their freaking minds because they've got to get back to where they were holding yesterday just to get to break even. So this is the one time of the day where a majority of market participants, being buyers or sellers, are working together to get back to where they were the previous day. That is why this is such a powerful, powerful trade. Now, you can see the bottom high volume area, Michael, the top edge is colored green. It has a green edge. That's representing the previous day's high. So you opened up with a monster gap up. I could not go short until I got a reading below that HVA edge where price currently was at. I got the trade. It went a little bit against me. That's fine. I'm with a 5-point max risk. It got to within about $1, $1.1 of my stop, and then it went down. Did I get the entire run? No, but I still got 20-some $100 out of it. Guys, let me tell you something. You don't get what you think you deserve. What you deserve is the most disgusting word in any language. You don't even get what you earn because you're still paying commissions and capital gains taxes on it. You get what you get. Be freaking happy that the method works and it's repeatable and you can do this over and over and over again. Do we win every single one? No, but we win a lot more than we lose. And the object here was to get all the way back to, at very least, that green edge, which it did. And then it went lower to that red line in the lower portion of the HVA, which is the point of control. That's the point. If you're going to take this stuff, you need to hold it until the end, and you hold it until you're not in it anymore.
So as a layman, right? Overnight session, right? The market's doing all this stuff. And that's one of the things with futures, guys, is it trades in the overnight, right? So in the overnight, the price got driven up, yet yesterday's market was right here at this green line. So when the market reopened in the morning, the expectation is it's going to have to drive itself back towards that green line, back towards the red line down here. So the fact that it was this high is telling us, it's an indicator that somewhere along the line here, both people are going to fight to get this matched up. Okay. The bottom is going to come up, the top's going to come down, but there's a gap there, and that's the gap that's getting filled. Okay, and that's why the term gap fill comes from.
Out of balance, completely out of balance, and the market hates being out of balance.
And it has to balance itself back up. And so both sides are incentivized to get back towards that middle ground. So that gap fill trade. Now, there have been some massive gap fills the past week and a half, 2 weeks. I go back to that chart that showed the S&P and as an index, and it showed showed gold, showed oil. I mean, the gap fills have been monsters. And you guys have been picking these things off. I've seen some of the student trades. I mean, there have been some huge gap fill trades that your guys have taken. The volatility is feeding you guys, especially in the overnight. So when you talk about trades to take, you've got your reversals, your HVAs are working really well. And you've got these massive gap fills. What are some trades that people should avoid as a futures trader in these markets?
Go short because I know it's going up, or excuse me, go short because I know it's going down. Go long because I know it's going up.
Those are good trades.
For Bubba, they are. For Bubba, they are.
Nobody know. No, you have to read the chart. Nobody knows which way they're going for sure.
You
gotta focus on the levels. I hate when they tell me what they're going to do, because I don't know what the news is going to be, and I don't know how and the other thing you don't know is the news already priced in. A lot of the news is already priced in the market anyways.
It's already baked in. Yeah. Yeah. Especially when you've got these, texted out information. Well, Trump's going to make an announcement at this time. So-and-so is going to make an announcement at this time. And that news already gets baked into what's in the market. Go ahead.
If I may also, there's only a handful of entities that can move the market vertically, meaning up or down. There's only a handful. Period. No matter what anybody tells you. It's not a bunch of buffoons on a Reddit page in their mom's basements all saying, hey, let's sell this. No, that's a joke. It doesn't work. Let me tell you what happens. Using that gap fill as an example, those monsters who are holding yesterday, some of them are going to say, how much am I up? How much am I down? That's what's going to decide what happens. Period. That's what decides it. Not fancy economic reports, not buffoons on TV telling you to do this or do that. Generally, when they're trying to sell you their book of business, or they're underwater trying to get people to jump in and save them, that's what it is. I'm not holding anything overnight. I'm doing everything right then and there, period. I have no horse in that race except what's going on in front of me right now based upon what I know.
Well, and I think you also have go ahead, Bubba.
Just remember, the guys on TV, other than me, I'm the only
other than Bubba.
I'm the only guy on TV who is not selling my book of business. I'm not trying to bring in, I'm not an advisor. Okay. I'm a teacher, and I'm only giving you exactly what my own positions are, just like I do with the daily update every day. I'm only telling you what I really think based on what I'm watching right at that particular time. I have no idea what's going to happen tomorrow. I could make a prediction. I said this week there'd be a rip your face off rally, and we got it, but I didn't know it was going to be Wednesday. It turned out to be
and you
Wednesday.
didn't know where it was going to start, and you didn't know where it was going to finish.
No, I could just use the information based on the chart telling me that it was going to come, and trying to get involved in it once it got there is all I can really do. Again, if anybody thinks they can predict the next major move in this market, they're out of their mind. I mean, do I think there's a big sell-off coming? Yes, but I can't tell you when. I'm just going to trade the charts and trade the market as I have, because that's all I have to trade.
Exactly.
Just to Bubba's credit, He's telling you what he's doing with his positions. I'm putting my levels up the day before. My reputation is on the line every single day, the day before the market even opens. When you see certain people on TV and you see the little chart that says they don't own, none of their family members own this. Oh, so they're just being a great guy or a great girl going on TV because they want to help you. Wrong.
Right.
They're most likely, and I'm just saying I have no proof one way or the other. But if you think they're going on TV to help you out because they're such swell people, you're freaking wrong.
Agreed.
So, you know, and the echo of what you guys both just said is you got to stay nimble. You got to pay attention to what's going on right now. You have to be in markets and be in methods that can make those adjustments quickly. I can't stress enough of using software. That's something just me personally. I know Ed had just asked that question. I think it's a really poignant question. You know, Bubba was standing there on the phone with us and had however many trades made instantly while he was on the phone with us. Pat, you just showed a software that there's no way someone could have manually taken that trade. So I believe also that computer assisted trading is very, very important. And it's something that we do have to take into account as we make these moves. So what I like to do, guys, I'd like to wrap it up. I think there's a couple of key points. There's a key takeaways. One is we got to hedge. Everybody needs to hedge. If you've got an existing portfolio and you're not hedging, you're not buying car insurance and home insurance and health insurance. It's insurance on your personal on one of your most important assets. You need to make sure you're doing it. Yes, we have come up with simplified ways of doing it. Check us out, reach out to us if that's something you're interested in learning how to do. And when it comes to the day trading side, you want to add income. You want to take advantage of these markets. You want to supplement what you're making on your investment side. That there's very specific techniques that work very, very well in these markets. Bubba's blow off, it's built for these market conditions. The Market Mavericks room. Pat's inverses and reversals, those HVAs are working now just as well as they ever have. And those gap fills. I mean, to me, the gap fill is the ride. That's the ride everybody should be on. You know, most of your gap fills, you can be there for 30 minutes trading, 45 minutes trading a day and take advantage of those gap fills. You don't have to sit for hours all day long. It's the transition from the overnight to the pit session. That's your opportunity to take it. So that's my 2 cents. Pat, did you have anything else you wanted to close out with?
We also can help you guys out with prop trading firms. And you have to really look at this way. Why are you, and here's another objection. Oh, it's so expensive. It's honestly not, because you're using tremendous leverage for a very small amount of money. And generally, you're going to keep between 80 and 90% of what you make without sustaining or taking the kind of risk that you would normally take with $150,000 in your account, 50,000, whatever the number is. You're not on the hook for that money. Someone else is taking the risk after you qualify.
Yep. Bubba, do you have anything else you wanted to add?
Listen, just what we do in the short term and the hedging works all the time. And the relationship between Pat's so HVAs and the blow off are incredible when they time up together.
Yeah. Well, and again, a winner's a winner, whether it's his method or yours. If they're taking
No, but
the
I mean,
trades.
when they combine, you know, every morning I ask the guys that are doing both, I go, what are the HVAs? Because I know if I'm getting a blow off in either side into one of his numbers, it's almost it's a very high probability win when those things happen.
Extremely high probability win. Hey, maybe we should develop a software, guys, that incorporates the two of them. Just
I
throwing
know
that
some
out
guys
there.
that do that.
Very cool. So guys, just a quick summary. We have a multifaceted education program. We've got live signal room, online classrooms, live online trading rooms. We do trade reviews, trader checkups, a campus library. This is not a mom and pop type organization. Okay. We do keep it real. We do come in front of you guys and have conversations. We don't hide from our mistakes. We believe in what we do. We're adamant. Okay, about protecting our customers and helping our customers. I have done a massive exploration of the education programs that are out there. I've signed up for many of our competitors. I've taken things that I like that they do. I've incorporated into our system. I have yet to find a company that has comprehensive of a system as what we've developed here. And on top of that, it's being led by these two guys who, I mean, they're legends in the industry. The other side of it is we do have automated software. Market conditions are market conditions, guys. I recommend having a conversation with one of the education consultants if you're interested in learning about them. There are certain things that are just ripping it in this trading environment. Have that conversation, find out more. As far as the Q&A goes, if you are interested, if you're not an existing student and you are interested in starting out with our program, we actually have lowered our introductory prices. We want to get more and more people involved. You can get involved in the basic options trading program, which is a Monday night call and a Saturday morning call, and then it's got trades that are posted out all week via email. There's a market commentary, so it's called Signals. That's called the OTP. It's 99 bucks a month, guys. If you haven't tried it, I strongly recommend trying it. And then we've also got the Future Starter Pack, which is Pat's room and the Market Mavericks room combined. It's 99 bucks a month. Okay. Can't say enough about, look, it's the best way for me to explain it is it's $99 a risk. All right. You try it for a month, you don't like it, you cancel it, you call it a day. But it's $99 a month worth trying it out and seeing if this works and if this is a good system for you. That said, if you have any questions, now is the time to ask them. If you want to get some more information, go to www.targettrading.co and you'll see discovery calls. Just make an appointment with one of the education consultants. All of our consultants are traders, guys. They're happy to show you the systems. You can also go to www.bubbatrading.com. Guys, we're essentially the same company. We do a lot of crossover. We tend to keep the option stuff at Bubba and the future stuff at Target, but we work hand in hand. We're sister companies. All right. If you have any questions, now is the time to ask them. Pat, Bubba, thank you guys very, very much for your time. I know you guys are busy. You have to pop in and pop out. I'll give just a minute to ask questions, and after that, we'll let everybody get back to work.
All I can say is just be careful. It's treacherous markets, and we want to make it the best for you guys. That's our objective. I mean, Pat can trade for himself, I can trade for myself, but we like to teach, we like to educate, and we want to make sure everybody's prepared for whatever the market throws at you.
You know, Bubba, one of the things you and I talked about the last time we were in Vegas, and we do have to do that. We got to do a session one of these days about why we got into this and why we do what we do, because we get asked that a lot, and it's an important session. You know, people talk about making money. We can all trade for ourselves, but there's something fun and powerful for bringing it to people and seeing people succeed and do it.
Listen, you know that I'm building a whole new program for moms.
Just for moms, man. Yep. And when you're doing it, it's a labor of love.
Yep.
So
I got to tell you, Mike,
I didn't see any questions.
I got into this side of the business because I absolutely despise the vast majority of charlatans who pass themselves off as professionals because they're freaking liars.
Very true. Very true. So, well, guys, thank you guys very, very much. Yeah, I'm not letting him quit, Chris. I'm keeping him around a little bit longer. I promise you. I fly out there to check in on him and make sure he's good.
He's not going anywhere.
Guys, thank you.
I'm old. I just had a birthday. I'm too old. I got to retire. All right, I'm going. Goodbye.
Are we at triple digits yet?
Pretty close.
59.
Guys, thank you. Always. Thank you guys all for attending. Have a great day. Good luck. Protect yourselves.
Thanks,
Let's
everybody.
talk soon.
See you guys later.
See you guys. Have a great day. Thank you.